Hey traders, welcome to this week's episode of Traders Trade, episode 4 for the week of August 31st to September 4th. Let's recap last week. So the market continues to march higher. We have a rally in narrow sectors, meaning that only a few sectors are rallying. So that's not a healthy thing. That's not what we want to see. What we want to see is that all the sectors are moving up. But right now, we're mainly seeing it in technology and consumer discretionary. So what we want to see the laggers to also pick up, like energy, financials. And then the Fed announced that they're going to let inflation run. So that's good for assets like stocks, real estate. It's going to be bad for things that are tied to interest rates like savings accounts. That's going to be continuing to go down lower and lower. And looks like Uncle Powell is not going to increase interest rates anytime soon. So it's going to push people towards assets like stocks. For economic reports, so this is why we're seeing new home sales and home prices are soaring because rates are low. It's motivating people to go and purchase real estate. Durable goods orders are good, and unemployment claims are above 1 million and rising again. Onto the market, the S&P 500 made a new high, and it's continuing to run. It's going to get away from the 50 and the 200. So we have to be careful here. We don't want it to run up too quickly and leave the moving averages behind because we know that things will most likely revert back to averages. So the higher it gets away, the higher the chance of a big pullback. I would rather see a slow move up, maybe some consolidation before moving up higher instead of this run up right now. And unlike the S&P 500, the Dow Jones Industrial did not make a new high. It is still below the pre-COVID high. It is in an uptrend. At the moment, it is at the upper channel. So it could pull back down here to support level before going back up. The Dow Jones Transportation surprisingly made it approached the pre-COVID high before the Dow Jones Industrial, so that's surprising. It peaked its head right above the pre-COVID high, so we'll see how it does in this week. Nasdaq is absolutely relentless. It actually was already an uptrend, and now it broke above this uptrend. So if we were to measure the height of this channel, then we can project a target above it, and that would be the new target. So we'll see if we can run up to that new target or it's gonna fall back down. The Russell 2000 right now is in a consolidation. It's in a high base. The support held up really well. It's from the previous high in June. So we see it tapped it. Also, that's at the 20-day moving average, and now it looks like it's bounced off from it and going to move higher. So in summary for the market, super bullish on the S&P 500 and the Dow Jones Transportation and the Nasdaq. Bullish on Dow Jones Industrial. It still has room to go up to the pre-COVID high. And then neutral to bullish is for the Russell 2000. Okay, on to the sector analysis. First, we have materials. It made a new high, and now it bounced off the support and is heading back up. It's right at the apex of this triangle, so we got to see what it's going to decide to do. Either break up or it's going to fall down to the hopefully to the support level, and hopefully we'll see the support level hold. Energy is looking bearish. It's right now in a descending triangle formation, and it's right at the apex of the triangle, and looks like this trend line is keeping it down and down. So most likely we're going to see a break below this triangle formation. Financials also being kept under this resistance trend line, also at the apex of the triangle. So it's got to decide what it wants to do, either break out of it above or heading down. Industrials, it did beat the previous high in June and then fall down to support here and then bounce up. So that's healthy. It is consolidating in the apex of this triangle. So again, we're seeing a lot of consolidation formations. So pretty much the market is consolidating, and everything's adding up, all the sectors. So we might see a violent move either up or down. So we got to see if it's going to break above or down, and hopefully this support level will hold. Technology, similar to the Nasdaq, was already an uptrend and broke above the up channel. So now we got to see if it's going to continue higher or it's going to fall down, test the support and go back up, or it's just going to fall down to this the bottom of the up channel. Consumer staple is in a tight uptrend. It did make a new high, higher than the pre-COVID high. So we're going to see it is near the top of the up channel. So we're going to see if it's going to fall from that, test the support before moving back up higher. Consumer discretionary is also in a tight uptrend, also at the top of the uptrend. So we're likely going to see maybe either consolidation within the channel, or it could also break above it, which is less likely. Real estate is in a triangle at the moment, a symmetrical triangle. So it's right at the top of the resistance trend line. So it needs to decide if it's going to move up or lower, or it can just continue to move sideways. So utilities is in this triangle right now. It just touched the bottom of it. So there's a chance that it can bounce off of it to test the resistance trend line. There's also a lot of moving averages here, including the 200-day moving average and the 50-day. So right now, I would say just wait to see what it does rather than act at the moment. Healthcare looking good. It made a new high back in mid-July, and then it has been in a high base formation and then recently broke above it. So let's see if the break is for real. Let's see if it can continue higher. Communications was super bullish last week. It consolidated in this apex and then broke above it really strong. Now it's taking a breather. So we got to see if it's gonna maybe just slow down a bit to let the moving average catch up before moving on higher. Okay, so in summary for the sectors, a lot of super bullish setups for materials, technology, consumer staples, healthcare, communications. And then for neutral to bearish, we have utilities, and then super bearish is energy. On to the contents. And the links are in the description. Check out this video from Macro Voices podcast from Jesse Felder, who was their guest, and they talk about the current stock market situation. They brought up some concerns about the market, and the sentiment is to be cautious. And then from Chiovaco Capital, again, they produce great market breadth analysis every week. Check it out. He has a bullish sentiment long term. This graph here is from Fundstrat, which is Tom Lee's research suite, and it's talking about another tailwind for the technology sector if there's not already enough for this sector. Looking towards another from 2020 to 2040, it's showing the technology sector can possibly go parabolic again. He's showing that every time there's a labor shortage is when you see these pyramids on up here. Every time that happens, the technology sector goes parabolic. So here, and then 2020 is right here, and we're expecting another labor shortage, which will increase the use of automation, which is going to be another tailwind for the technology sector. So he's saying that it's most likely going to cause the technology sector to go parabolic for the next decade or so. And back to the note about how the S&P 500 is running away from its moving averages. This is a tweet from Liz Ann Saunders, who is the chief investment strategist for Charles Schwab. And she's pointing out that the current price is historically the highest it's been away from the 200-day moving average. So looking back, it's never been this far away from the 200-day moving average. So that's when you see something this extreme, it's a sign to be cautious. Events for this week, here are the most anticipated earnings for this week from the earnings whispers. Monday, look out for Zoom. It's been on an absolute tear. On Wednesday, we have Macy's. And then for the hot cloud stocks, we have CrowdStrike and Cloudera. And then on Thursday, DocuSign, another benefactor from COVID, Broadcom, a semiconductor. Events for this week, again, the markets are overextended from the 200-day moving average. So be cautious of a sector rotation from the overvalue to the value sector. For economic events this week, on Tuesday, we have the ISM manufacturing report. Thursday, we have the initial jobless claims and service PMI. And then lastly, Friday, we have the payroll report. In conclusion, the market wants to go up. Thanks to Uncle Powell and the Fed. A sector rotation is likely. And just expect more volatility, right? Anything can happen. So stay safe and happy trading, everybody.